Good afternoon, everyone, and welcome to Stock Market Today. It's Allie, Coram, and Ken Shreve here with a breakdown of the action for Thursday, October 5th, where we saw declines, but stocks finishing off lows. And Ken, all eyes are now on Friday's jobs report.
Yeah, it was looking pretty ugly early in the session, but the Nasdaq S&P 500 indexes managed to close well off lows, so that was encouraging to see. Did find three stocks to talk about today in the biotech sector. I want to revisit Neurocrine Biosciences, NBIX. There was news today on that stock. Also, futures exchange operator CME Group, ticker CME. And finally, Remitly Global. This has been kind of a mainstay in the IBD 50, ticker RELY.
All right, let's do it. First, let's take a look at the major indexes. The Nasdaq today down 0.1%. Same for the S&P. The Dow fractionally lower by day's end, and the Russell 2000 managing a gain today of 0.2%. So good to see the Nasdaq closing off lows here today, because as you said, with the pretty heavy losses towards the beginning of the day after the day of strength we saw yesterday, which did lack volume. We will remind folks out there, it was disappointing to see big declines. So it does seem like volatility in the air here a little bit, Ken, but this rally attempt for the Nasdaq here could potentially come down to the reaction for tomorrow's jobs report. What do you think?
Yeah, exactly right. It's just kind of in a holding pattern here. We did get that nice percentage gain for the Nasdaq yesterday, up 1.3, 1.4%. Not much volume behind the move. Today, it was kind of interesting. Again, just kind of looking inside the market internals. Volume wasn't heavy again. It was below average today again on the Nasdaq, but notice that it did pick up the pace a little bit from yesterday. And then you had a nice rally off lows. The Nasdaq was down more than 1% intraday. So there were definitely some buyers lifting the index off lows, and that 13,000 level looks to be pretty good support right now. I mean, we've been talking a lot about weak market internals and the possibility that we could see more downside, and that's certainly still a possibility. But and I wish I could tell you how the market's going to react to that jobs report tomorrow. I'm pretty sure if it's a really strong, much hotter than expected number, we should see yields rise, and that shouldn't be good for the market. The Fed wants to see some softness. They've made no secret of the fact that they want to see some softness in the labor market. So they're hoping for a kind of a lukewarm, maybe a soft number, and maybe we get yields decline for the third straight day, and that could be a help to the stock market. So we'll have to see how the market reacts to the data tomorrow. Should be interesting.
Yeah, and the Nasdaq's lone rally attempt here, at least one progressing enough that would qualify as a follow-through day if conditions are met. The Nasdaq is teetering here with that rally attempt, so we'll have to see, like you said, how the jobs report impacts that. We also want to take a look at the S&P 500 here, awfully close to that 200-day line, and on the weekly chart, sitting right at the 40-week, Ken.
Yeah, so we are second day of a rally attempt for the Nasdaq. I think we're the sixth or seventh day for the Nasdaq. But yeah, just like the Nasdaq is holding support at 13,000 a key level, you see the S&P 500 firming up here at 4,200 and its 200-day moving average. So encouraging performance for the S&P 500 as well. Second straight session where you got to close near highs. Looks like volume on the NYSE, interestingly, quite a bit lower than what we saw yesterday. That's not fully hit yet, but at least we saw a little bit of higher volume on the Nasdaq today.
Okay, and let's take a look at the Dow, which closed with a fractional decline, but a lot of ground to make up here, Ken.
Yeah, this is looks a lot different than the Nasdaq and the S&P 500. Obviously, the blue chips have been beaten down here. Second day of a rally attempt for the Dow Jones here, but a nice close off lows as well.
And the Russell, which has been even more damaged as of late, but managed to eke out a gain today. It looks like on the downside. Next stop, 1700, which is so crazy because it wasn't too long ago that it was trying to get above 1900 or, you know, hitting that 2000 level, and then a very swift undercut of the 200-day 1800. And now is it going to find support above 1700 here, Ken?
Yeah, so much damage done to small caps here. So Russell 2000 is in a lot of trouble, just like the Dow here. So I've been talking this week about it's just a market of round numbers here. So for the Russell 2000, 1700 is a pretty key level to watch. But I think how the market reacts to tomorrow's jobs report is going to be important, and I think we'll just hang our hat on two pretty constructive days for the major stock indexes. We've been kind of pounding the table on the fact that there's just not really a lot of good merchandise out there to really consider seriously buying at this point. But market conditions can turn pretty quickly, and a lot of people are still holding out hope for a Santa Claus rally between now and the end of the year. Maybe it starts in October, maybe it takes a little while longer, but we'll see what that jobs data says tomorrow.
Mm-hmm. And let's take a look at XLE, which tracks the energy sector, failing to bounce here, but it is holding the 200-day line, round tripping its gains from the last couple of months here, now back to the levels it was seeing in late July. And a lot of this is because of the price of oil. And here's a look at USO, which is a rough proxy for the spot price of oil here, which is really having a hard time, taking a big hit this week and another notable decline today on top of yesterday's hard hit.
Yeah, I mean, this is pretty rough, and it wasn't that long ago when USO was looking pretty good, showing a lot of relative strength. There was a lot of volume behind the up move initially over 75, and then it gets turned away at the 80 level. So it is really interesting to see all the selling that all of a sudden has cropped up in the oil market. I mean, when you see the stock market coming in and in a corrective phase, it's normally concerned about growth, whether it's earnings growth during third quarter earnings season, or whether it's economic growth. Maybe the economy might be in for a sharper than expected slowdown sometime next year. So maybe not surprising. That's why we're seeing oil really fall precipitously here, just because of falling demand and maybe the prospects for just slowing growth all around the world. So it's been a pretty violent decline in recent days, but we'll see. But it looked like those oil and gas stocks were ready to provide some market leadership, and this market correction seems to be going after everything now.
Mm-hmm. It does. And you mentioned it earlier, one thing that's going to be watched like a hawk or a dove. I don't know. I was trying to make a joke. Tomorrow is the 10-year yield, Treasury yield could move tomorrow, and we'll have to see what impact that has on the equity market. But your thoughts on where it's at now?
Yeah, I mean, just a very oversold bond market, and again, 2 days of declines for that 10-year yield. But look at how far it's still holding above its 10-day moving average. So, I mean, the bond market is still quite oversold. Wouldn't be surprising to see yields, back off highs here, and maybe that provides a little bid for stocks. So, I think the bond market's going to be pretty active tomorrow once it digests this jobs report. But it's good to see the yield down for two straight sessions, but really hasn't given up a whole lot of ground. Still holding above 4.7%. So this has been the big impediment, for the stock market. Rising interest rates, strength in the U.S. dollar. It's going to need to see some softness in both the dollar and bond yields to have any hope for stocks to rally here.
Yeah, absolutely. Well, let's check in on those three stocks, starting with Neurocrine Biosciences. NBIX is the ticker here. Gain of 4.2% today. Volume picked up as it bounced off of the 50-day line and arguably presents an early entry here, Ken?
Yeah, we're still, I mean, really, positive technical setups are few and far between right now, but Neurocrine rallied today. They had positive phase 3 data for a drug to treat a genetic disorder that affects the adrenal glands of children and adolescents. But as the name of the company would indicate, Neurocrine deals with neurological drugs. They have a strong pipeline. They also have a pipeline with drugs to treat schizophrenia, depression, all that. But it is highly profitable. So you have two choices in the biotech space. You can go for the really speculative names that don't have any earnings and sales, or you can kind of focus on companies like Neurocrine that has a really good, steady track record of annual earnings growth. You can see the top line growth has been impressive. So I particularly like the look of the weekly chart here. This is just kind of a big, long base. It's been moving sideways, kind of like a coiled spring here. Pretty well formed cup with handle base with a pretty clear pivot. So if this market starts rallying, you'd expect a structure like this to work. But as long as the market's in a correction, a lot of these good bullish technical patterns don't have a hard time working.
Yeah, that makes sense. We really need the market to work with us here. Let's take a look at CME Group, up 2% today, volume behind the move, and the last couple of up sessions here. And what's nice to see on this daily chart is that RS line hitting a new high, earning it a blue dot, meaning the outperformance versus the S&P 500 since this base structure and over the last year, quite notable. But you get the blue dot as a base is forming or as the stock is breaking out. So to see it before a breakout even happens really underscores the strength of this stock as of late.
Yeah, really just trying to keep or pay attention to good setups in this market. Again, with the market acting the way it is and in a correction, it's most stocks are having a hard time making headway. I don't really see any news for CME Group. This is a futures exchange operator. The big leader in the group is CBOE. That one really took off and is, just broke out powerfully and is holding up near highs. But I have to tell you, CME Group is right there as well. So it's in a good base here. Digested gains well after breaking out over that 200 level. Kind of trading sideways, finding support at the 50-day moving average here. Doesn't have the fundamentals that we like to see. I mean, it's got a good track record of bottom line and top line growth, but you can see revenue growth in recent quarters a little bit below that 20-25% threshold we'd like to see. And then the annual estimates a little bit soft as well. But for a stock with strong technicals, a decent composite rating, I think this one is still worth watching. It's in a pretty good industry group, and like I said, CBOE continues to perform well too.
Okay, and we'll cap things off with a look at RELY. Can we rely on this stock, Ken?
I'll tell you, it's been a mainstay in the IBD 50. It's been in the top IBD 50 top 10 for some time now, just because of when you look at the recent revenue growth at this company, it is right on the verge of profitability. You can see big increases in fund ownership in recent quarters. So this stock really has the look of a can slim type stock. It's got the earnings, it's got the fundamentals, it's got the accumulation distribution rating of A. When you look at that weekly chart and you see those big blue up bars as the stock is breaking out and rising, I mean, it's definitely a stock under some accumulation here. Really, when you see a stock test the 10-week moving average for the first time after a breakout, this is as good a test as you can see. So again, just kind of keeping track of stocks that are, with good fundamentals and technicals. I think Remitly is, still deserves a look here. Their business is not complicated. The founder of the company lived in Kenya many years ago and found out how difficult it was to transmit money, border over border, costing 8 to 10% a pop. And this company does it, at about a cost of 2% or even less. So you can see the revenue growth has been, just tremendous, and could still see more upside here.
Mm-hmm. So with that being said, Ken, let's just say tomorrow turns out like it's going to be a follow through day. We don't know that yet, of course. We don't have a crystal ball. Could take a while to play out. We could sell off more. But if we do get a strong gain and this stock clears that 26 level, do you think that would be a potential buying opportunity for this stock?
Yeah, I mean, if we get a good strong update for the market and signs that buyers are kind of coming back into this market, I think all three stocks that we looked at today and stocks that we've looked at in recent days, whether it's a Tesla or a PCAR, kind of keeping track of strong performing stocks here. So arguably, I mean, this was an early buy signal today with the stock rising above its recent highs, but that 26.44. If we go to the weekly chart. 26.44 there looks like a perfectly good just a perfectly good pivot there, and really what a solid test of the 10-week line looks like.
Great. All right. Well, thank you for that, Ken. And thanks so much to everyone for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope you join us, investors.com/IBD Live, for all the details on that. We will see you there, and we've got you covered after the close tomorrow as well.